Hi everyone, I want to share with you how money is taxed. Did you know that not all money is taxed the same way? I'm going to show you 3 ways that money is taxed. The first one is taxed now. What I mean by that is that things like mutual funds, banks, stock market, you're taxed several times during the phase as your money grows. So there are three phases that your money behaves over time as it accumulates. So the first one is seed contribution. This is the money that you put in. So this is after-tax dollars, right? So you already paid taxes on your income. Accumulation, you pay taxes on accumulation in the form of capital gains tax because you pay interest on the gains. And then D, distribution. In this type of account, you could pay some money in the distribution. Let's say if you don't have a will or a trust or you don't have your estate set up properly, there could be taxes or fees associated with getting the money out of these types of accounts. The second type is a tax later vehicle, and many of us are familiar with this because we have 401ks. In a 401k, we know that we don't pay taxes now. Our money goes into that 401k account pre-tax, right? But you will have to pay taxes later. So the way that works is you don't pay any money now with your income. You don't pay any taxes as it grows each year, but in distribution, you will pay a significant amount of taxes when it becomes distributed because you haven't ever paid taxes before. The third type is what many people are not familiar with. It's called tax exempt. And the way that works is you pay money, it's after tax dollars, so you pay money on your income, but you never pay taxes again. You don't pay taxes on the gains or when it comes out. There are 3 accounts that falls within this category: a Roth IRA, life insurance, and municipal bonds. To further illustrate this point, let's look at another example of tax later versus tax exempt. So with the tax later vehicle, you don't pay any taxes on your contribution, right? All the money you put in, you don't pay taxes on it. But in the future, all of that account is subject to taxes, okay? So over here at tax exempt, your contribution, you pay taxes now. You pay taxes on the contribution, and in the future, as your account grows, all the gains are not taxed. So there's a story I like to share with people that kind of sums it up a little bit. There's a farmer goes into a feed store to buy seed for his crop. An IRS agent happens to be there. IRS agent says, "Excuse me, Mr. Farmer, I'm going to have to tax you on your business. You know that, right?" He goes, "Yes, I'm familiar with that, absolutely." He says, "Well, but I'll give you a choice. I can either tax you on that bucket of seeds that you have today, or I can not tax you on the seeds and tax you on a portion of your crops whenever there is harvest. Which would you prefer?" Naturally, the farmer chooses to be taxed on the seeds.